You know, we were kind of people trying to make the play that this morning we were at maybe the lower end of this trading range. Maybe the bulls could step in and defend it. It pretty much gave way an hour ago. What was that about?
Yeah, no, it did. It looked a little bit like a technical retest, a return to recent lows. And they saw that was beginning to fail, and then we went for that. The public falls for it every time. The round number defense, you know. Oh, look, they're going to hold 2,600 or they're going to hold 24,000, and most of the time, none of that works. Now you've gotten the Brexit thing right back at center circle, as I suggested in my pre-opening comments, and I think that's going to weigh on things. I think it was kind of evident by the reception she got in Parliament that she's got a tough road ahead of her. I'm talking about Prime Minister May, and so that, I think, is going to weigh on us. I mean, you know, we're starting to see global trade and global markets beginning to slip, and we're still talking tariffs and a variety of other things. So, you know, we'll wait and see how that works out all the way.
We spoke last week about the rate hike cycle and your natural dovishness.
Yes.
Today, even stalwarts like Goldman are coming around, starting to shave their forecast for 19.
Well, it's everybody comes to their senses eventually. You know, just takes me a while to sit and wait for them.
Their argument is still, though, that the market pricing in one or none is a bit too low.
Well, it could be, but let me suggest back to them. Suppose we go with December, which everybody assumes we're going to do, and it begins to have some negative impact. That will certainly make for a one and done, and maybe a one and a rethink. You've had a couple of people on your air suggesting one other thing that I said, that they might be considering cutting at the end of 2019, although they think, the people I'm suggesting, thought that there would be a couple of rate hikes before, and the cutting would be attempts to repair the damage done.
Art, it felt to me like the Dow really took a strong leg lower during Theresa May's speech.
You're
when
absolutely
she was getting
correct.
that reception, as you talked about. What happened to the U.S. index exceptionalism that we seemed to be experiencing earlier in the year, where the U.S. economy was continuing to run and we were shrugging off all these issues that others overseas seem to be having? Is this just a one-day thing, or has the dynamic shifted?
I think the dynamic is shifting. I don't think it's fully moved. I think they're beginning to realize that world trade is showing shakiness around the edges. The Chinese trade reports show that their exports are down, and you would naturally say, well, of course, with the tariffs. No, it's not down with the U.S. yet. It's down with Europe. So we're beginning to see some of this stuff move around. Look what happened in Paris with Mr. Macron. So you're beginning to see the calm edge of everything wear off, and I think it's going to come into play here in the U.S. markets, not only relative to trade, but I think Pisani made an interesting point. He said he got asked over the weekend about how much is political, how much is Mueller and whatnot, and I think that will begin to creep in only because it will limit, if not eliminate, the efficacy of the president and what he wants to get done. So he might, it's not so much are they worried about an indictment or an impeachment, but I think they do come to believe that as this thing intensifies, it will be more and more difficult for him to get things done through the Senate or the House or wherever. And that's going to have an economic impact.
And it just seems it's one more thing in the abundance of things that are easy to worry about right now, right? I mean, when we had a lot of good stuff offsetting those concerns, whether it was about D.C. or about the rest of the world, you could overlook it. But right now, it's slowdown mode, it's late cycle. It's also the banks. I mean, I don't know if that's really where all of this starts coming together, Brexit and everything else, but they're down another 3% today. They were down before the broad market really rolled over. So do you think that's mostly a Brexit kind of play right there, plus the yield curve?
No, I think it's a double. The yield curve certainly got their attention, but the Brexit thing continues to be potentially disruptive. It's not just moving out of London. It's where do things go from here? And so I think, we think it's Christmas time and Santa's making up lists. Well, so are the investors. Unfortunately, their lists are things to worry about, as you aptly point out.
Well, there's banks. I mean, transports, though, are not a Brexit story. Worst week in 7 years and down another 3% today.
But they are a trade story. And you know, I think we discussed this before, that some of the initial thing about the tariffs and whatnot, the recent, or earlier, I should say, strong economic reports we had could well have been drawing the business in to get ahead of the tariffs. Let me get a little busier now. Let me import more stuff. Let me build up my inventories. And now that is stopping and slowing, and we're starting to see the response to it.